RS Group have large structural tailwinds. They trade at a large discount to their listed peers, and after a period of disappointments, I think they are about to exceed expectations. We own RS Group, and this is an investor's introduction. RS Group makes transformers a key part of the electric grid. Transformers are used to transform the electricity. You can use it to step up the voltage and then move electricity long distances with minimal loss of electricity, and then again to step down the voltage when electricity are near the end consumer. RS Group have the whole product range of transformers except the very largest transformers, and they serve a broad range of customers. Oil immersed transformers are using oil for insulation and to carry away heat. They are the cheap, durable workhorses, and the oil cooling lets them run hot and absorb overloads. Cast resin transformers remove the flammable oil and use epoxy resin for insulation and fans for cooling. They are more expensive and are used in environments where fire is not a risk that can be tolerated, like inside buildings, hospitals, data centers, in ships, tunnels, offshore platforms, and similar places. And power transformers are the backbone of the transmission grid, handling high voltages for long distances, and they're almost always based on oil. RS Group's main markets are in Western Europe, and their switch roots go all the way back to 1919. The group we know today is mainly the result of 3 larger acquisitions in 2015, 2016, and Kite acquired in 2024. RS Group went public in Switzerland through a SPAC in December 2023. But last year the share price declined 63%. This decline was a result of a host of different reasons. Expectations had clearly run ahead of reality. They faced delays in ramping up a new factory in Bottleneck. They only had an adequate backlog in the smaller transformers, and when it comes to listed companies, an adequate backlog is not that great. They downgraded and changed the way they guide in the midterm. They said 2026 would be a year of investment with a bad cash flow and high operational expenses for a new power transformer factory they are building, which will only really deliver revenue in 2027. And we had a reset of the shareholder base with the SPAC sponsor and former private equity owners selling out. And finally, to top it all off, we also had new management. And here is my read of where we are today. I like the new management, and I think the new CEO is highly qualified for the job. So the change of management caused some noise when it happened, but I think it's a good thing long term. In the same way, having the SPAC sponsor and private equity funds sell out creates noise, but they are likely to sell in all circumstances, and I think it's great going forward that they are out and there are no more share overhang. And if we look at what this 2026 year of investments are actually invested in, they are expanding with a brand new power transformer factory that will double their capacity in power transformers. The factory is on schedule so far, and while the 2026 results are dragged down by a lot of hires for this factory in 2027 and 2028, when the factory ramps up, they will start contribute revenue and earnings. So right now we have artificially low results, and in the coming years we will see the fruits of those investments. And power transformers is a great market right now with much more demand than supply, and we are already seeing orders being booked into 2028. And when the factory is fully ramped up, it will contribute around 25% revenue growth because it doubles the capacity in power transformers, which is 25% of revenue today, roughly. And then we know power transformers have the best margins today. We know that they already have a lot of the operational costs in the books today, and they will get scale benefits for being a bigger group. So I think earnings are going to grow a lot more than just 25% when this factory is fully ramped up. My best guess is 40% EBITDA growth, but it's a rough estimate. So right now we are about to start thinking about 2027 and 2028, and I think those will be years of revenue and earnings growth, while 2026 is a year of artificially high operational costs. And right now the grid, which includes transformers, especially the large transformers, is the main bottleneck in supplying electricity and meeting the huge expected increase in electricity demand we are seeing in Europe, driven by data centers and heat pumps and electrification of transportation, electric vehicles. I did a whole video on this, which I will make sure to link at the end if you want more details. But for now, the big picture is we really need a lot more electricity. We need to ramp up investments into the grid, especially the larger part of the grid, and transformers is a part of building out the grid. So I see very good odds of RS Group actually outperforming expectations from 2027 going forward, including outperforming their own midterm guidance. And I'm quite sure the positive outlook and the real-world data we're seeing with ever-increasing demand will also address the adequate backlog situation for the smaller oil-immersed transformers. But exactly when we will see this improvement is harder to say. For the smaller cast racing transformers, I think the outlook is better because they are used in data centers and similar applications where the demand is very explosive right now. And finally, the delays in ramping up the Bottleneck factory is no longer relevant. They have ramped up, but it does showcase the risks in ramping up the new power transformer factory. It's not certain they will stay on schedule. It can easily go wrong and there can be delays. If we turn to the financials, they are pretty straightforward. No big weird adjustments, pretty fair accounting. So there's only really one thing that's worth highlighting, and that is in Switzerland they are so conservative that they require goodwill to be amortized every year, which then will make the results look artificially low. And to avoid this, RS Group, like many other Swiss companies, have written down the entire goodwill from the acquisitions, which means that the equity looks very low. But that's just a result of having made acquisitions of profitable companies with goodwill and then writing down the goodwill immediately to avoid having amortizations make the accounting numbers look artificially low. In 2025, RS Group did meet their lower new midterm guidance, but that's not a sure thing in 2026 with all of these headwinds they are facing. However, from 2027 and onwards, with the great recent data for the demand and with the ramp up of the new power transformer factory, I think they are likely to outperform their midterm guidance. And they have a great capital allocation policy, investing organically, making sensible inorganic acquisitions, and finally returning all excess cash to shareholders. If we compare RS Group's valuation with their listed peers, we see that they are very cheap compared to their peers. And I also think they have good chances of outperforming the 2027 expectations, which will only make them even cheaper. The bull case for RS Group is strong long-term structural tailwinds, with recent data points in the market pointing to an acceleration in demand. And their new power transformer factory is perfectly positioned to really drive a lot of earnings and revenue growth in 2027 and 2028. They are cheap compared to their competitors, and because they are part of a real bottleneck, they have the potential to become quite popular among investors and quickly reprice. If we look at the bear case and the risks, 2026 can easily disappoint investors. And the last lockup on shares from the acquisition of Kite is about to expire in September 2026. It is a competitive market. The ramp up of the new factory can be delayed, it can go wrong, and they need to continuously deliver operational excellence. And finally, supply risks being built up faster than demand. Thank you for watching, and please read our disclaimer. This is just an investor's introduction, not financial advice. We plan on evaluating our investment in RS Group at a later stage. Bye.